Hi, good evening. Welcome to our weekly market outlook. Today is 22nd September 2014. So if you can hear me, just give me a yes. We have a one guest in the message was showing so excited from Roland. So if you can tell me what makes you so excited, you can just let me know. You can share with me. You can share with everyone here why you are so excited. Just kidding, man. Okay, great. I saw lots of yes coming. So let's start our today's webinar. Brief introduction of our webinar's 4 parts. The first part, we have the recent economic and the fundamental analysis. And second is the this week's events. And number 3 is the technical analysis. Number 4 is the Q&A part, okay? So I'm also very excited today. The reason is the morning, I'm just getting my new phone, iPhone 6. So today is it's a very good day. It's a very excited. So now my eyes is a bit tiring. A bit tired after play the phone for a few hours. So okay, anyway, let's start our today's webinar. Still, we are going to introduce to you that we are living in a divergent world. So what does that mean? That means the Chinese economy has the Chinese economy, the growth pace, and the U.S. also have its own growth pace. And for UK, it's also have its own growth pace, and also for Eurozone, it's also have its own growth pace. So every central banks, they just make the monetary policy for their own country's benefit. So meaning to say that the different economy, the different central banks will adopt a different monetary policy, which is going to affect the currency market and its financial market. So it's very important for us to understand that which economy is standing on a stronger position. So its central banks is likely to tighten the monetary policy in the near future, and what kind of economy is pretty weak at this moment. So meaning to say that their central banks most likely is going to maintain the dovish tone. As usual, we just take a look on the last week's events first. Last week's we don't have lots of events, but I would say every single event is pretty shocking, and it's pretty attract lots of attention from the market. First news was not so important, but if you concerned about the Federal Reserve is going to do next, then probably you need to take a look. Is the U.S. CPI. Year-on-year dropped to 1.7% from previous 2%. Although the U.S., the Federal Reserve is not looking at the CPI, they are looking at the PCE. But these two, they are still correlated with each other. Meaning to say that if the CPI drop, most likely the PCE also drop. Then the Federal Reserve has more reason to keep the rates longer. So this is one piece of the news you need to take a look. Another is the no new message from the FOMC last week. Although we see the dollar rally after the FOMC meeting, but in my personal view, there is no new message from the FOMC last week. Although they're shifting their rate hike expectation, but Janet Yellen still lots of dovish language to tell everyone that the Fed still will put the rates low at a considerable time. So lots of people asking about what's the definition of considerable. I would say probably Federal Reserve also don't know the answer yet, because they need the coming data to confirm. I know that on last Thursday and a Friday, the Scottish news is very important, but in the end, they say no to the independence vote. That's why sterling is back to normal. I mean, you don't need to worry about a strong selling off of the sterling. One of the last news is also China PBOC announced 500 billion yuan target loan last week. There is some new update today for the other piece of Chinese news, but just based on this news alone, the PBOC announced another 500 billion yuan target loan. It's give the people feeling that the Chinese economy, they don't want to do lots of reform. They probably still will use the stimulus to stimulate the economy in the near term. So that's give market lots of negative feeling that maybe we might not see lots of a reform in the end of the year. The growth is still more important. But I want to say one thing is lots of people here might watching the soccer, the football, right? I want to use one English team, its name called Liverpool, as an example. Okay, Liverpool was a very strong team, but their performance is not so great in the last maybe last decade. The reason is also because of Liverpool. They just I don't think they do lots of reform. So and a lot of especially lots of structural reform. Probably they're not doing very well enough. So that's a reason why Liverpool can be very strong in the past 20 years, but in the past 4 years, 5 years, Liverpool always stay in a very weak position in the English Premier League. So the reform is very important. The reform is not only very important to a soccer team, it's also very important to a country. Also, another exciting piece of news is Alibaba shares surge after the IPO trading, right? Last Friday, everybody is looking at the Alibaba shares, which is about 20 to 30% surge after the announcement, after the trading of the IPO. So here is one great example is why Alibaba is so successful. It's also because they always do the things very up to the market, and they always catch the market attention, catch the different opportunity in the different periods. So that's also, I think, makes Alibaba shares pretty attractive at this moment compared to other shares. Okay, so let's look on this week's events. China flash manufacturing PMI, which will be out tomorrow morning, and it might affect the Aussie dollar tremendously again. In the afternoon, we will see the Eurozone flash manufacturing PMI. Both. So tomorrow, if you are brave enough and you have a strong positions, I probably would say you might look at the you might consider to look at the Euro Aus. It probably will be very volatile tomorrow. But one piece of news I want to share is based on my estimation, both of the PMI reading might be negative. The China PMI also pretty negative, and the Eurozone PMI might be also a little bit negative. So when both economy are going to negative, so meaning to say that Aussie Kiwi, the direction is pretty hard to predict at this moment, because it need to see which economy's PMI drops more, right? So but it's a very important information for tomorrow. And the German E4 will be also on this day on this week. And also we have the US housing and the durable orders data. So the top news I would say is the two manufacturing PMI data, but the rest of the data probably not so important this week. So if you are great technical traders, probably this week is the great week for you to trade. Use the technical formula to trade instead of using the fundamental, because I think the market most likely want to take a break of the not take a break, maybe want to digest further of what Janet Yellen said last week in the FOMC minutes, probably will say. So it's pretty, I would say probably it will be a pretty peaceful week after tomorrow. Well, it's a very interesting. KT just asked one question, say, Jimmy, I'm not agree with you. I'm a Liverpool fan. I think MU is worse than Liverpool. Well, different people has the different view. But I mean, in Asia, probably I would say Manchester United maybe have more fans compared with the Liverpool fans. But just my personal, just my personal, you know, personal feelings. So there's no data support for that view. Okay, so let's take a look on the currency performance last week. You can see that dollar was pretty flat, right? We look at the dollar index first because last week there's a few things influenced the US dollar. You can see that the US dollar before the FOMC meeting, you can see that it has a very heavy drop. The reason is because market expect that we will see a very bullish, a dovish Federal Reserve, but in the end, it's not because they shift the forecast for the Federal Reserve when they want to raise the interest rate. But later we will also share with you that if we look at the lots of languages the Federal Reserve mentioned, I would say probably we will still see a very dovish Janet Yellen. It's not very hawkish Janet Yellen. We will bring you words by words, sentence by sentence of what they're saying last week. You will see that Janet Yellen still pretty dovish. Okay, now we go to the individual currency. You can see that sterling only 0.34%. Appreciate against the US dollar. That's also because of before the Scottish vote. Lots of people do not really expect the Scotland will leave the country. Again, I'm not a geopolitical specialist, but just based on the price performance itself, since the early morning before the poll was released, we can see sterling rally pretty a lot already on that single day. So after that, even we see sterling drop a bit. So you have to get used to this kind of behavior, the price behavior. It's almost appear in the financial market. It's called sell the rumor, buy the facts. So what does that mean? That before the announcement of the news, not only the Scottish vote, it also can be some economic data, some political votes. So it's called sell the rumors. When the rumors come out, people do a sell first, right? People or do a buy first. Then after the facts come, so just buy the facts. It's always happened in the financial market. So don't get confused that if let's say you see after the Scottish votes get confirmed, why sterling drop? It doesn't make sense, right? So it makes sense. It's called sell the rumor, buy the facts. And next we see Kiwi drop, Aussie drop, Japanese yen also drop. Japanese yen drop is pretty normal because dollar yen goes higher. Dollar yen goes higher means the U.S. Treasuries, the yield go higher because of the Federal Reserve comments. And Aussie and the Kiwi drop most likely is because of the Chinese the Chinese data, right? So the Chinese data is pretty negative. Last Monday we didn't do a webinar, but last Sunday, which is about 8 days ago, China just announced the industrial production, which is only 6.9%. That's the lowest since 2008. That really puts the people worried that whether the Chinese economy, carry any risk to failing to achieve the 7.5% growth target. So people have this kind of a worry. And the euro also dropped. That's pretty normal. One thing is because of dollar strengthening. The other thing is because of the ECB TLTRO program just kicked off last week. So more liquidity in the financial system. Definitely, it's pretty normal to see euro to underperform. Right. So direction is still pretty clear now. Since the U.S. economy data, although recently we saw some little retracement, but the general trend is still holding pretty well. So if that's the case, we are always looking for the opportunity to buy the U.S. dollar against the rest of the currencies, right? So one approach is we can always looking at what kind of alternative currency to sell against the U.S. dollar at some specific period. Sometimes can be Aussie, sometimes can be Euro. This is one approach. The other approach is to buy the US dollar at a dip. So basically that's our direction toward the end of the year. But of course, lots of things can happen moving forward. But if everything stay in the same pace, we would like to go this kind of a direction, right? So one thing we still want to share with you how to trade the dollar yen. As I always know that we have a lot of dollar yen trader here. So one of the good things to look at dollar yen at this moment, when Bank of Japan did not release any important announcement or information, is to benchmark with the U.S. Treasury yield. If you hear something that market is going to heavily pricing that the Federal Reserve might raise the interest rate at least middle next year or early next year, but not say, okay, they're not going to raise the interest rate until the final quarter of 2014 or 15. As long as the rate hike expectations are still there, we always looking at the opportunity to long dollar yen and also to short U.S. Treasury. Short U.S. Treasury means the U.S. Treasury yield will go higher, right? So you can see that even since beginning of the month, this September until now, the U.S. Treasury yield and the dollar yen goes high to the same direction. So if you want to trade dollar yen, always benchmark with the U.S. Treasury yield. So because that is a very good benchmark for you to consider to gauge the direction of the dollar yen. So how about the equities, right? Equities are still pretty solid. As you can see, the S&P 500 still stays above 2,000 at this moment. The risk sentiment remains very well, which is the white line, which is the S&P 500. You can see it looks like 2,000 becomes some support now. And the other line is the MSCI, the yellow color, MSCI global index. It's also reaching the historical high, which with the current moment is at 1740, right? So I believe now, if you think, some people think currency is a little bit tough to trade, you can also look at the equities market, right? We are talking about equity is in an uptrend, buy, uptrend, buy, uptrend, buy. So lots of people still ask the questions like, when is the end of the trend? Frankly speaking, I think it's at this current moment the uptrend it's still pretty clear. The reason is the economic condition is getting improved, and the Federal Reserve also would do it in a very gentle way or in a very gradual way. So in this kind of a scenario, it's very difficult to see the equity will face any severe selling off. Okay, so now we take a look on what Federal Reserve said last week. Then we give everyone a direction that, okay, what's likely of the policy direction of the Federal Reserve toward the end of the year. So just an update to everyone that for the next month, October, there is no press conference for the FOMC meeting, right? So what does that mean? Mean to say that the Federal Reserve is unlikely to give any new direction. So if they give any new directions, cause some turbulence in the market, it's a bit difficult for them to explain, right? Because verbal is always easy to explain. Imagine you quarrel with your girlfriend, your boyfriend, and you want to explain something to him. You want to explain something verbal. It's more easier to avoid the miscommunication, right? So if you want to use an email or want to use a message to explain, there will cause lots of a misunderstanding. So this rule happens between the Federal Reserve, the central banks, and the market as well. So they always prefer use the verbal to communicate with each other. So in November, there's no FOMC meeting, and the next FOMC meeting with the press conference will be December. Wow, very fast, man. We are going to say goodbye to 2014 very soon. Already, the time is really fly, man. Okay, so if that's the case, we need to play very careful. We need to be very careful about what Janet Yellen said in the last week, as that could be the main direction of the Federal Reserve policy toward the end of the year. So the headline is Yellen keeps considerable time pledge as Fed outlines exit, right? So I summarize some key sentences for you to read, and I will explain to you what does this sentence mean. Okay, the Federal Reserve stuck to its pledge to keep interest rate near zero for a considerable time after it stops buying assets, even as it outlined a strategy to exit from 6 years of unprecedented easing. So this sentence just tells you that they still have lots of things which is probably need to consider. Consider the inflation, consider the labor market. So this is one of the reasons they still want to maintain the same thing. I mean, maintain the current scenario for not for a long time, but maybe I would say toward the first half of the next year. Probably I don't see it's a problem. So that's why you see why Janet Yellen is still very dovish at this moment. This is the two key sentences he say. The labor market has yet to fully recover. If the labor market has yet to fully recover, she will wait until it's fully recovered to raise the interest rate. And also she mentioned that there are still too many people who want a job but cannot find them. I mean to say that she still want to do the stimulus and puts the rate low for some period, so that is for more people to find a job. Also, there's a very, very, very important dovish language from Janet Yellen is on the third part. Yellen added that inflation has been running below committee 2% objective. This is a contrast to the panel July statement that it was somewhat closer to its goal. So I a bit confused and not understand why market take the last week FOMC minutes FOMC statement so less dovish. I think from the inflation part of side, it's the attitude of Yellen is very clear when she was telling you that we are closer to its goal at July, but in August meeting, in September meeting, she tell you the inflation has been running below the 2% objective. So all these things are telling us that it's definitely not a right time to judge that the Federal Reserve want to use this meeting as a hint to the market that they're going to raise the interest rate soon. So I think it's not the case at this moment. So, but still, the people will say, are you trying to say that we are going to we are going to bearish US dollar, since Janet Yellen is still not so hawkish? But it's not. Like these charts we also explained to you a few times last time is now the economy condition is about 75% better than all time since 1960, right? So if this is true, you can see that the right hand, the zero line is the Federal Reserve target. You can see after the financial crisis in 2018, we are really moving closer and closer to the Federal Reserve long-term objective. So mean to say that we are closer to the Federal Reserve rate hike date, but just we are not reaching the time when Federal Reserve inform us that they're going to raise the interest rate. So in this period of time, the trading direction is definitely, I would say, looking at to definitely look at long US dollar, but it's just in a very gradual way. I mean, I only will maybe buy the US dollar when the US dollar retrace. So also I mentioned, on the other hand, it's really just let everybody know that what's the Federal Reserve people's thinking. Now the interest rate is about 0 to 0.25%. That's 2014. No objection. It's very clear. But we look at toward the end of 2015, what kind of interest rate? Now, this is not voted by the economists like me. This is project and a vote by the FOMC members, Janet Yellen colleagues, right? So the credibility is much higher. You can see that 2015, their median estimate, the median rate expectation is about 1.375, and the prior median expectation is 1.125. So we can see that it's about 275 basis point higher. So it's this chart gives the people thinking that, okay, the Federal Reserve is more more hawkish compared with last time, right? But don't take this thing too serious. The reason is these forecasts can always be changed. When the economic data is not so good next time, then they probably will lower the interest rate projection again. But here is very interesting. Okay, let's take 1.125% as a guideline. So now the interest rate is about 25 basis point. So in order to me to reach about 125 basis point, I need to hike 4 times. This is very interesting. So meaning to say that usually the central banks will do the hike about every 25 basis point. So in order for me to hike 4 times to reach 125 basis point, I need to hike 4 times. So if I hiking the interest rate since June next year onwards, meaning to say that in every FOMC meeting, I will hike 25 basis point. Let me repeat this again. Okay, it's very important for us to know that if the median forecast is the FOMC meeting, they will raise the interest rate at June next year from 0.25 to 0.5. In order to reach about 1.125, they need to hike 4 times, which is about every FOMC meeting. I'm not very sure how Federal Reserve will communicate with the market in the first half of the year. Of course, they need to let market understand very clear that hiking is not tightening the interest rate. Otherwise, they will see the borrowing cost to surge. So this is something very interesting. The other interesting thing is people say it probably will raise the interest rate at early first quarter or early second quarter or late fourth quarter. So at least to reach 1.125 4 times hike, they can do it, like on and off. They don't need to do it, every meeting. So there will be lots of interesting debates, to happen next year. So still 2015, I'm sorry, the focus will be still on the Federal Reserve. So Janet Yellen also say it's gradual, right? So she said the first raise is benchmark federal funds rate, or it's the interest rate. It would then cease reinvesting maturity debts from its balance sheet, reduce the asset holding in a gradual and a predictable manner, right? So there's still lots of things after they raise the interest rate. When last time Janet Yellen mentioned taper or not taper, not Janet Yellen, Bernanke, right? Last year still Bernanke mentioned about taper or not taper. It gives market lots of guess. So now taper is confirmed. Now we are in the stage of to raise the rate or not raise the rate. So people are arguing again. So when we come to the next stage, what's the stage? When to raise the interest rate, how much to raise. After that happen, we will come to a stage like when to shrink the balance sheet or not to shrink the balance sheet, right? So it's stage by stage. But no matter what, do you find that one clue is since we experienced the Bernanke taper tantrum since May last year, from now the US dollar is continuing to move higher. If this is the model, no matter what's the debates at, if they're closer and closer to the rate normalizations, it should be benefit the US dollar, right? We study so much on the Federal Reserve, we study so much on the US economy. What we want is we want a clear direction of the US dollar. We want a clear direction of the US Treasury yield. It's just like, when you go to the school, you study. Maybe you say you like to study, but I'm not very sure how many primary school students or middle school students or high school students, how many of them really like to study. They go to the school is because they want to go to the test. They want to go to the university, right? So the same thing here. We study a lot. The reason is, in the end, we want to get a clear direction of the US dollar. So look at the last paragraph. Yellen also emphasized that interest rates are unlikely to raise quickly as the economy continues to overcome the damage wrought by the recession. So it just tells you that everything will be still very smooth. But from the language itself, it's really telling us that we are moving closer and closer. Okay, so now we are talking China, right? After we're talking the US, we're talking China. US is really, we don't have lots of things to talk. Since the, last year, everybody is talking the tapering topics, then you are very familiar about the tapering topic already. So now, every time I go to the TV interview or media interview, there's a one question called when Federal Reserve going to raise the interest rate. So we are discussing this for many months already. So everything I would say it's pretty similar to what we see in the past 2 to 3 months. If you ask me, do you see any changes or any meaningful changes, I would tell you the answer is no. I would see everything is still pretty the same. So now let's move China. China is a big complicated story now. You need to understand the Chinese story a little bit better because moving forward for the next 2 to 3 months, you still need to, if you trade Aussie, if you trade Kiwi, you probably still need to look at the Chinese economy. So today you see Aussie drops a lot, right? The reason is because I just let everyone know first, right? Because I believe some people is asking why Aussie dropped so much today, why rest of currency still not so bad against the US dollar. It's because the finance minister, Mr. Low mentioned that the China, the broad-based stimulus is pretty impossible toward the end of the year because reform is on its agenda at this moment. So that's why people panic, right? Because people see the industrial production from 8-point-something% to 6.9%. If you don't do a strong stimulus, can you still achieve the 7.5% growth target? People are a bit worried. So okay, now let's go to the last week. We go step by step. China joined ECB in adding stimulus as the Fed scale back. So what does that mean? It means that China last week announced like they are going to, disperse the 500 billion yuan loans to the 5 largest banks. So each banks will get about 100 billion, right? So 100 billion yuan. So this money is go to, there's no restriction of this money goes. It can go SOE, it can go personal loans, it can go mortgage loans, it can go private sector's loans. So people thought this is some sort of a stimulus to come, because the last year the base is pretty high. So in order for China to achieve 7.5% growth in the second half of the year, they had to do lots of stimulus. And from the third quarter, all the indicators to tell us that probably the GDP only can achieve 7.3 to 7.4% in third quarter. So if this is the case, they need to achieve about 7.6 or 7.7% to achieve the 7.5% growth target. Is that possible? It's a bit humanly impossible if they don't do a mega stimulus, or not a mega stimulus, if they don't do a sizable stimulus. So slowdown signs, I just mentioned the weakness industrial output expansion since global financial crisis and the moderating investment retail sales growth slowdown in data released on 13 September underscore risk of deepening economic slowdown. So those readings follow a second straight drop in imports and a 40% decline in broadest measure of the new credit for August, as well as the indicators showing a manufacturing pullback. So it's a very good piece of a summary. It's summarized all the important the negative factors of the Chinese economy recently facing already. But we still see a very strong performance of the Aussie in the past a few weeks or month, not last week, right? But the reason is because of the people are still expecting the China government will pull in lots of stimulus. So basically that's the support. Why Aussie was pretty strong in the previous few months, because people all have the stimulus hope. Also, there is the pessimistic tones now as the China may miss its whole year growth target, and given the government needs to adopt strong stimulus measures such as the interest rate cut are getting louder, right? So this is a report by the Xinhua News Agency, which is kind of a government, it's a kind of a government news agent. So they are not seeing a new normal in China economy. On the other hand, they are showing distrust in reforms. So it's like the two sides are not satisfied each other. For the people who want to see the growth, it's missing. So for the people who want to see the reform, it's also missing, right? So now they have to if they really cannot balance, they need to pick one options toward the end of the year. And this is very important option because this option will influence the stock market in the Aussie other currency market as well. So now let's take the story of today, why you need to be a bit cautious, right? I just saw news from Bloomberg. Yuan rebound at financial chief rule out major economic stimulus. So why yuan will rebound, currency will rebound? Because it's same as ECB. If ECB do stimulus, euro drop. If ECB pull out the stimulus, euro rise. So here the reason is the same. If Chinese economy will do more stimulus, then you will see the yuan drop because there's a more liquidity flood into the system. But now the major economy stimulus is, if it's out of the table, then you will see probably you will see yuan will strengthening. But this is not the point, right? The point is, the most important point is, are we still going to see the stimulus, which is from today's news is pretty unlikely. Rebounding from its biggest weekly losses in 3 months, yuan strengthened. After China Finance Minister Lou Jiwei said the nation is experiencing stable growth and there won't be a major policy adjustment. Stable growth, in his explanation, is above 7%. Maybe it's called stable growth. We don't need 7.5, we don't need 8%, we just need 7%, then we are happy already. So this is his view. Then markets start to worry already, okay, because the target is still 7.5%. But you seems like not very worried about the GDP target, and you say you want to, exercise some reforms. Of course, for some risk-taking position would be out, right? They probably will go to some other portfolio, but not the Aussie portfolio, not the yuan, not the Chinese stocks portfolio, not the H-share portfolio. So all this information are very important. We most likely we need to see how market react tomorrow. Tomorrow I would say later I will share with you, but we can share now since we are talking China. I would think maybe Aussie will face another round of retracement. It's very hard to say it's a sell-off and it's a retracement, but tomorrow morning Aussie might drop lower a bit because in my understanding or my calculation, I don't see tomorrow the HSBC fresh manufacturing PMI going to rebound very quickly. It probably will drop further. If that's the case, combining with today's the finance minister Lou's comments, we probably will really see Aussie might dip further, maybe even drop below 0.88. Now the price is slightly above 0.88, right? So now 0.89, so probably it will move toward the level of 0.88. So for anyone who trading Aussie can take a note. Okay, so after the news and the economic introduction, let's go to the poll time. Today's poll is very important. You have to answer me very, not carefully, but just let me know what do you think. As we are facing a divergent economy, so it's pretty impossible for me to cover every single economy. So we need to cover a group of people which is have the largest percentage of what do you trade. So if you trade Euro more, I will go Euro economy. If you are trade Aussie more, I will go more on Chinese economy. So just a basic understanding of everyone's here. Like, which currency do you trade the most? You can choose Euro, you can choose Sterling, you can choose Aussie, you can choose Yen. Wow. It's pretty okay. Our majority trader here, guess what, is euro dollar, which is about 40%. 40% of people choose euro dollar. It's the most trading currency. Okay, if this is the case, that means either you are following me or I'm on the right appetite for you, because one of my focus in the previous few months is the Federal Reserve and the European Central Bank. So it's great. And 19% choose sterling, which is I think is because of I don't always talking the UK economy, but so maybe only 19% choose trading sterling, and 20% choose trading Aussie. Right? Is Aussie. If you trade Aussie, you need to look at the Chinese economy, also the RBA. So also now 25% choose yen. So it looks like our majority of our clients still like to trading euro and the dollar, which is very good. You should be earning lots of money, right? Because I've been calling that shorting euro dollar since beginning of the May, and well, the currency drops more than 1,000 basis points. So it's not difficult for you to. It's not very difficult for you to you know to get some profit from there. Okay, so now let's close the poll and go to this week's events. You can see this week is it's very light, right? Over the weekend we have a G20 meeting. This G20 meeting I also don't understand, because from the headline of this G20 meeting is we need to avoid those kind of okay, the G20 leaders, they say that the current financial economy carries some risk as the low rates are putting low for too long. But I don't understand that point, because every person is so scared to raise the interest rate, and every central bank's trying to be dovish as long as possible. And the finance minister are talking about, okay, there's a too many risk. Well, anyway, so that's the case. That means this G20 meeting is not so important for the short-term traders. Mario Draghi will speak at 9 p.m. Well, what time is it now? Oh, it's 8:47. So I don't really know what will happen on Mario Draghi's talk. Maybe he just a brief introduction of the TLTRO. Also, he will open the mouth, say something else. But it's great that time we are still looking at the. We are still you know, looking at the charts at that time. So let's see what will happen later. And tomorrow 9:45. So later 9 p.m. if I forgot to turn to the Euro charts, you guys just can send a question box. So I will just take a look on what happened on the Euro first. Okay. So tomorrow we have 9:45. We have the HSBC Fresh Manufacturing PMI. Last time is 52. Forecast is 50, and my forecast is 48.2. 48.2. So, 49.8. It's about 0.2 lower than the HSBC forecast. So that's the reason I give, I give a call. I guess. Okay, I guess Aussie might drop tomorrow's morning. In the afternoon, we have the French fresh manufacturing PMI, German flash PMI. Also on 5 p.m. we have the Eurozone PMI. 4 or 5 p.m. Let me double confirm later. It's either 4 or 5. We will have the Eurozone fresh PMI. So, but the 3 p.m. and 3:30, that probably Euro will react really, right? Because Germany and the French, they are the two largest economy in the Eurozone. So their manufacturing PMI probably will affect the entire manufacturing PMI. The rest of the news is not very important. Wednesday morning, we see the NZ trade balances, not very important, not even a knee-jerk reaction. And on Wednesday, 10 p.m., we see the new home sales. That's, I think it's probably might affect the equity market, but it might not affect the currency market. And on Thursday, we have the RBA Governor Stephen speaks. Should not be any problem at this moment, as the Aussie already dropped so much already, and there's a less drop bonding room for him to speak, right? Imagine when the last time when Aussie is about 0.95 or 1 point something, he has a lot of things to say. Okay, Aussie is high, but now Aussie is about 0.88, 0.89, so there's less room for him to continue to drop bonding. So, well, should be a non-event here. And Thursday night, we had the durable good orders and U.S. Weekly jobs claims. That's pretty standard, right? So that's all for today's for this week's events. Tonight, ECB Draghi speak. We might be paying a little bit attention, and also on the tomorrow we might be a bit pay attention to the global PMI data. Okay, so now let's move to the charts. Okay. Let's look at the first currency pair, euro dollar, or probably we go talking other currency pair first. Might be, is that a good option? Maybe on 9 p.m. we shift to the 9 p.m. then we shift to the euro. But before that, let's see whether any reaction from euro. Not really. The euro currency is still trading between 1.2840 to 1.2870. So we leave this currency pair first, maybe in another 10 minutes. Okay, so we just look at the other currency pair first. Dollar yen, it's a very strong position, which is I didn't expect it would be that strong, right? I thought 105, 107. It should be pretty peak already, but it's a break again because the U.S. Treasury yield goes higher. So you see, that's the tough thing of if we just look at the technical analysis, right? In my point of view, in my dictionary, fundamental analysis tell you what to buy, and the technical analysis tell you when to buy, but or when to buy or when to sell. But the main direction, maybe I'm an economist, but so I'm still looking at the fundamental to give the direction. But anyway, we still need to look at the charts to know where's the prices, right? So for dollar yen, you know, it's so close to 110 or 109 already, right? If we just look at the very short-term momentum, the currency pair is now entering a range. This range is between 108.7 to 109.45, right? So two ways to trade. One way is benchmark with the US Treasuries to trade. This is the one way. The second way is use this box to trade, but it's still pretty risky because now, you know, the currency pair is so high already. If we break 110, it can, you know, it can just forever all the way go to 112. As not only Bank of Japan, Kuroda want to lower the yen, the Federal Reserve effect might also might push the dollar higher and higher. But in the meanwhile, if nothing happens, you can just benchmark these two levels. One is 108.7. The other resistance level is 109.45 or 109.5. So these two levels you can just take a look. But on the long run, the other reason why dollar yen is so high is because we don't have lots of geopolitical risk at this moment, right? So last a few months, you see dollar yen was lower because the geopolitical risk, like Russia and Ukraine. But now, Russia and Ukraine are no more in the story. Also, the U.S. economy seems like getting stronger and stronger. So that's why you see dollar yen is getting higher and higher. Okay. So the second pair, let's move to the Aussie dollar. Aussie is trading at 0.8898, right? It's hard. Look at the hourly chart. It's pretty difficult to decide whether, you know, it's reaching a resistance or not. So we use the daily chart, right? We draw a Fibonacci line. We see whether there's anything. So we go to the lowest level in January and draw a Fibonacci line to the highest level in July this year. It's also not tell us lots of things, because if we look at this Fibonacci retracement, it's also telling us that it's pretty meaningless. It's either the pair will move back to 0.8965, which is about 100 basis point away, or it will all the way go to 0.8690 or 0.86880, again this kind of level. So let's remove this Fibonacci. We see whether there's any longer time frame can for us to look at to decide the key level. Okay, so let's say here I'm drawing the other line. I'm drawing another trend from 20, start from 2010. We see whether we can get anything. 2010, the Aussie was pretty strong. Also nothing, right? So, but based on here, then we probably need to go back to the daily. We go back to the daily chart first. The currency pair is definitely in a downtrend, right? So it's if you ask me, I would say it will depend on the from the fundamental point of view, it will depend on how much PBOC or how much Chinese government want to save the economy. If you see, as long as you hear anything that the Chinese government is going to implement further stimulus to the economy to help the economy to reach 7.5% GDP target growth this year, you immediately, what's your immediate reaction should go to long Aussie dollar, right? If not, what to do? We will see some support probably at this level at 0.8840, around 0.8840 or 30, this kind of a level. You see there is some support for this level. So what can you do is, if later Aussie have a chance, let's say rebound to 0.89, I drop a line here. About 0.89, then let's go to the hourly chart. So if you have any chance, let's say to come to 0.89, it's always, let's say you can do a short. Then the profit taking level, it's not a lot, it's only about 60 basis point at 0.8835, but especially for today and tomorrow, I would say maybe I don't want to to long this currency, as I still believe the China PMI data tomorrow carries a higher risk. Okay, so now let's go to the Kiwi dollar. 3 minutes to go, 9 p.m. But I don't think when Mario Draghi open the mouth, it will react a lot. So it still depends on what he say. Kiwi dollar also pointing to the weak side, as you see if we go to the daily charts, right? You can see that it's still in a downtrend. It's similar to Aussie. It's also like reaching a key support level, right? The key support level is 0.8057. So there's a two way to trade for you, and one way is, at this moment, because the Chinese economy are still pretty weak and the RBNZ might not want to raise the interest rate at this moment, you can probably do a short, maybe slightly above at the current level. Current is at 0.8113. You probably can do about 10 to 20 basis point higher at this level. It also looks like some resistance here. Okay, maybe about 3.5, this kind of a level, for 4.0, this kind of level, right? You place a short, then see whether the currency will go to test the lowest level in January. The price is about 0.8057. So the other way is you just wait until the price drop to 0.8057, then do a long. So that's another story, because we still believe the RBNZ, they still will raise the interest rate, but they just don't want to raise the interest rate so fast, so they just want to take a pause. But that doesn't mean they want to, stop the rate hike already. It's a pretty amazing, right? You see, you look at the interest rate at January, which is about 2.5%. Now it's about 3.5%. It's about 100 basis point higher, right? 100 basis point higher, but now the Kiwi against the dollar, the currency value is pretty similar to what happened before they raised the interest rate, right? So this is pretty amazing, which means to say that once the RBN said to raise the interest rate, there will be lots of a catch up need to be done, right? So the other way you can do is, if you feel Kiwi dollar is a bit risky because you also need to look at the comments from the Fed, you can also look at the short Aussie Kiwi, right? That's the other direction of the trade. Gold, I didn't look at the price of gold for a long time already, but I guess it should be very low already. Yes, 1214. It's in a downtrend. Gold is a perfect mirror to reflect the Federal Reserve policy, right? Look at the daily chart. It's in a very strong downturn, and I don't want to long gold at this moment. So what's the good price to short? Probably a very, very, very solid price is at this level, but you will say it's a bit too far, which is at 1238, while the other level you can looking at is about this level. It's about 1217, which is only about 3 points higher, which I don't feel very comfortable, right? Because you see this level is kind of a support level for the gold in the end of the last year, but now it seems like it broke already. So well, for me, I think gold is not a very good place. It's not a very good place. It's not a very good asset to trade now. It's only a reflection of the Federal Reserve policy, right? If you feel the dollar will strengthening, you might not necessarily to short gold, right? Like what I say is, you can looking for short other currencies against the dollar. Okay, now let's move to euro. Last pair. Still, maybe this is nothing really important for Mario Draghi. Maybe just a brief introduction of what TLTRO are talking about. So we're looking at the hourly chart. Maybe let's look at the 4-hour chart first. In 4-hour chart, it's still in a downtrend, right? It's a daily chart. We probably need to go weekly chart already. Weekly chart, let's draw a Fibonacci line. It's let's take from Mario Draghi, wherever it takes in 2012, all the way go to highest level this year. So 61.8 Fibonacci retracement level could be the next level. What's the price? Let's drop let me see. The price is about 1.278. I think it's pretty achievable. Now the price is at 1.285, right? So I would say probably I will wait this currency pair. Maybe even I short now. I'm not a day trader. Let's say I'm a position trader. Even I short now, I think I'm still waiting for the price drop to 1.2780 at the price I mentioned just now, because I holding my view very clear that always looking for the rebound opportunity to sell the euro. That could be the direction toward the end of the year, right? Because the divergence of the global economy, one typical example is the ECB and the Federal Reserve. So now whether PBOC want to join the game, so for us to short in the Aussie, it's still too early to say. We need to see the data tomorrow and what's the coming determination of the European Central Bank. Okay, so now since euro there's not too many things now, let's go to the Mario trade call. Mario trade call today is short term sell gold, XAU versus US dollar. Entry price is 1225 and the stop loss is 1240, and the first profit is 1210 and the second profit is 1195. So that's the Mario trade call for this week. Now let's go to the Q&A sessions. If you have any question, can just type in the Q&A sessions and I will answer now. Mohammed say good explanation for the fundamental analysis. Thanks. Daniel asking if the yuan does not look weak as you have mentioned, do you expect the pair dollar CNH to go down further beyond 1.6130? That looks like a sterling. 1.6130 looks like a okay, yuan is a maybe the value I mentioned, maybe something is not correct here. Okay, maybe I can mention some of the direction here. Okay, yeah, CNH and the yuan is a really pretty volatile here, right? So yes, yuan is a very surprising at this moment, right? Because the economy is not very strong, but the yuan is continuing to go higher. One of the reason is because people expect that the PBOC probably will going to continue to stimulate the economy. That's why the economy will getting strong, the currency, then the economy will getting strong. So, well, it's very hard to give a call on the yuan now because me and a lot of even other analysts, we have discussed about the direction of the yuan, right? Everything is still pretty weird. It looks like the yuan is getting stronger and stronger, but I think yuan will still retrace from here. That means dollar yuan will go higher, not lower, as they still need to achieve the, although it might not be 7.5%, but even now, for them to achieve 7.4%, they probably still need some stimulus, right? So I think weak currency will benefit the economy. That should be the case, and for yuan is still most of the time is still fixed by the PBOC. So it very depends on what they want. John is asking what's the main reason that sterling dollar didn't going up when Scotland is not independent. So I just explained this just now. It's about sell the rumor by the facts, right? So lots of time it seems as I give you an example, like raise the interest rate. Before the Federal Reserve raised the interest rate, you can see dollar keep going higher. But when the moment Federal Reserve announced raising the interest rate, then probably some profit taking will come out already because people say, okay, this thing already realized already. So now it's for our turn to take profit and look at for next opportunity. So for the Scottish trade, for the independent vote, so the same reason apply here. Mohammed say this week, euro dollar will 1.27 as a target. 1.27, I think it's still pretty early. I don't think so it will achieve this week. But by year end, I would say, or by next month, it's pretty possible. But always remember two things. One is the Eurozone economy condition. Look at the inflation. The other is the US economy, right? So, okay, so if the current momentum continue, 1.7, 1.27 is achievable. Okay, the other reason, Steven is saying, sorry, I didn't get it. Why was there a plunge in euro dollar last Thursday, 2 a.m.? I thought you say nothing new was mentioned. Okay, here's some explanation. Okay, one thing is nothing new. The other is the market the market reaction, right? So the market reaction can always react to something, but in my understanding based on the FOMC minutes I just explained to you guys just now, I really don't see any new languages from the Federal Reserve. The only new language is they shift up the dots. They shift up the dots means they're putting the interest rate hike expectation higher. But like what I say is the forecast can change anytime. Even Janet Yellen also mentioned a few times that don't always look at the forecast, right? Pay more attention to what the FOMC statements or FOMC minutes. From the statement and the minutes saying, I'm still see the tone is still pretty dovish, not very hawkish. So most likely I would say October and November most likely market will believe that the Federal Reserve might raise the interest rate in somewhere next year, but it's still a very good time for Janet Yellen to monitor the US economic condition. So in the other words, I don't expect the US dollar to go up too sharply, as it's really nothing too much new in the last week's FOMC minutes. So okay, so that's all for today's webinar. Hopefully share with you guys something you might not aware last week. So next week I will have a business trip in China again. So most likely I will see you guys in 2 weeks again, right? So if you want to catch our daily market updates, you can continue to look at our reports. It will be still ongoing. So have a good night. See you guys in 2 weeks. Good night.